Taking a look at the auction market this week, and in New South Wales there will be 628 auctions, with 530 of those in Sydney. And Victoria will see 888, with 856 of those in Melbourne. There will be 117 auctions in Brisbane. South Australia will hold 158, with 148 of those in Adelaide. Tasmania will hold 3, and the ACT will hold 60 auctions. But let's take a look now at the most viewed auctions of the week. In New South Wales, we have 28 Beverley Place, Plumpton. It's a 3-bedroom, 1-bathroom house in a private estate. It's got a large backyard, plenty of space, and is going to auction this weekend with a price guide of $750,000. Over in Victoria, we have 35 Smith Street, Richmond. It's a 3-bedroom, 1-bathroom house, a picket fence-lined garden, a private paved courtyard out the back too. It's got potential to renovate there and has a price guide of $700,000 to $770,000. Over at 9 Victor Street, Boronia Heights in Queensland, there's a 4-bedroom, 2-bathroom house with a comfortable 7 car spots. It makes sense as it's on 5,000 square metres. It's resort-style living. It's got a saltwater pool, a Bali hut-style pool house, tropical landscaping, high-end finishes, high ceilings, open plan, and the auction is this weekend. In South Australia, at 69 Robert Street, Birkenhead, we have a 3-bedroom, 2-bathroom house on 430 squares. It has a gorgeous facade, wooden floorboards, new kitchen, fireplace in there, a covered patio outside with a neat yard as well. And in WA, we have 54 Jenkins Avenue, Nedlands. It's a 3-bedroom, 2-bathroom house on a tidy 300 squares. It's a neo-Federation residence with a lush front lawn, a single-level design. It's got potential for more renovation, but it's move-in ready. And the top listing of the week is an absolute beauty. It's 36 Eliza Avenue, Fraser Island, named Scott's House on Orchard Beach. And it has ocean views, a large wraparound deck to take advantage of those. And the upper level has 4 spacious bedrooms and open plan living areas, a kitchen, while downstairs has a separate living area, a bedroom, bathroom and a laundry. It's also got lots of parking for cars, boats, trailers, 24-hour power through an auto generator, which you may need. So it's listed for $1.995 million. But for more on the real estate market, including just how strong the auctions market is right now, I spoke with Angus from REA Group.
We've seen a little bit softer clearance rates over the past sort of month or so, in Sydney and Melbourne particularly. It is a little bit hard to get a read on clearance rates over the last month or so, given that we've had the disruption of the public holidays. And that said, clearance rates have still been a little bit stronger, generally speaking, throughout this year than what we were seeing towards the back half of last year, when things got really quite soft towards the end of the year. So, maybe not as strong conditions as we have been seeing, particularly not during the red hot markets of, say, late 2021, but a little bit better than towards the end of last year.
Are we seeing similar conditions state by state across Australia?
Yeah, one of the, I think, interesting things that we're starting to see at the moment is a bit more convergence in terms of what we're seeing in home price growth. We had been seeing an enormous divergence between Sydney and Melbourne especially, where home prices had been really quite soft, though we'd been seeing a lot of sales, versus what we were seeing in the smaller capitals in Adelaide, Perth and Brisbane, where home prices had been growing incredibly strongly. This year, that divergence hasn't really been the case. We've been seeing pretty similar pace of growth across all the cities. Melbourne, interestingly, is starting to actually see home price growth this year after a pretty soft few years where prices have been kind of flat to down. In fact, home prices in Melbourne are still down relative to where they were in early 2022 when the RBA started raising rates. So a bit more convergence across the country at the moment.
Can you talk us through, we've had some economic data this week, new loans down a little bit compared to the prior to December. What do you make of that, and what does that reflect about what's going on in the property market?
Yeah, that's right. So we had data from the ABS out on new loans issued. What we saw was a little bit of a slowdown across pretty much all buyer types, first home buyers, upgrade buyers, investors, all down a little bit relative to December. Though, I think if we look at the broader trend, what we're actually seeing is relatively solid housing market activity and new loan activity. It is up quite a lot relative to where it was in 2023 and 2024. Obviously, those were quieter periods, given how quickly the RBA had raised rates. What I think is particularly interesting is the fact that investor activity is really strong. It did come off a little bit in the March quarter relative to what we saw in December, but it's still sitting up near the strongest level we've ever seen, kind of close to the peak we were seeing during COVID, which was a really, really busy time for housing market of all types. And so what that means is of any given buyer and any given loan being issued today, the share of that that's going to investors is around the highest levels we've seen in a couple decades in some of the smaller states and in about 10 years in New South Wales. Really, the only exception to that is Victoria, where we're just not seeing as much of a pickup in investor activity as we have in other parts of the country.
It's interesting you mentioned investors, and I'm not sure how much you want to delve into this, but the super tax change is all the talk at the moment that we're hearing from the government. Do you expect to see an impact on property or even an immediate impact, even just in discussions?
Yeah, so maybe short and perhaps frustrating answer that you'll often get from economists is it's kind of hard to know. We don't have great public data in terms of the ownership of residential property by superannuation funds. That said, it's probably not going to be a large impact on the property market specifically for a few reasons. Residential property ownership in terms of investment properties by those over 65 is not particularly common. If you look at who owns investment properties, it's predominantly people aged sort of 35 to 55 in that kind of peak earnings part of their career. And that tails off as they kind of get towards retirement and then post-retirement. And we also know that the size of portfolios that are held are typically on the smaller end. Most investors only own one, maybe two properties, and so probably aren't getting close to that 3 million threshold. But of course, that's only considering their residential property, not everything else they might own. So look, there is going to be some impact. Some people will get caught by this. Some investment properties will get picked up and come to market, joining in that pretty busy investor picture that we're seeing at the moment, but it's probably not going to be a huge number and a huge impact. And I think, if we're thinking about these changes, really the first question for me is not so much their impact on the property market as it is just on incentives to invest in superannuation and on the tax system generally. And, those are not my area of expertise, but I think those are kind of the big questions here.
Probably the bigger impact on property prices will be rate cuts, and we're expecting to see another one next week, of course, when the RBA meets Monday and Tuesday. This is pretty much baked in, so I'm sure investors and buyers are all over it. But will this have an immediate impact if we do see another rate cut, or will it be all about what the RBA says is coming next?
Yeah, I think the answer is probably a little bit of both. We'd expect that rate cuts are going to have an impact on property markets. They are obviously kind of one of the most important things driving home prices and driving property markets. And so the fact that we're starting to see and expecting to see more interest rate cuts is clearly a tailwind for home prices. As you say, most buyers are probably pretty confident that this cut's coming. So, to some extent, that might already be a bit priced in. And what's really going to matter is the trajectory from here. We're expecting we're probably going to see a few more rate cuts this year. How many is uncertain. And, as with much of the outlook, a lot of it's going to depend on how things evolve globally as well as what we see here domestically. Signs domestically are pretty good at the moment. Inflation looks like it's come back under control. It's back inside the RBA's target band. And so that opens the door for more cuts. And that, all else equal, is going to be a good thing for home prices.
Angus, appreciate your time on the program. Thanks so much for joining us.